You're watching Masters in Trading Live with Jonathan Rose.
Hey friends, welcome back to another edition of Masters in Trading Live. At Masters in Trading Live, we get on here every single day, 11 o'clock Eastern Time, to go over the market. And every single day, we're going to share our number one trade of the day. Today, we got 4 cool topics for you. The first topic is conviction. When you get into a trade, you have to believe. If you get into a trade and you have doubt, you have zero chance. Conviction, believe. We're going to talk about an IPO lockup rally, which we had yesterday. We are in position, not sure if we're going to have it, but there is a very good chance that we see a rip your face off rally. I'm going to explain exactly what that means and what we need to see. And then finally, our trade of the day is going to be in the QQQs, the NASDAQ. So hang around until the end. This is going to be a good one. Let's go to the charts. Conviction when you're trading. Now, I have this topic because I was at my corporate partners last week. I was doing some filming. And the fella that I was doing some filming with, great guy, we were talking about the markets. And we were talking about Bitcoin. And he's saying, oh, Bitcoin's down today. And he was really excited that Bitcoin was down. And I said, I don't think I've ever met somebody who's excited that Bitcoin is down. Are you bearish Bitcoin? And he said, no, I own Bitcoin, but I'm so bullish. When I see a pullback, I look at that as an opportunity. And that's trading. That's belief. Traders need to look at trades, or investors need to look at investments just like they would invest in any business. So when you make that decision to invest, you're all in. You don't get to decide to be in that trade. And then once you're in that trade, I don't know if I like this trade. I hope it goes up. It might not go up. You need high conviction to stay into a trade. So I thought that was a great example. The number one way that I can tell, for me too, whether you really like a trade, is when it goes against you. Do you see that as opportunity? Do you see that as the market is on sale? Or do you see that as, oh shit, market's going against me, here we go again? Here's an example in CCJ. We got a question about CCJ because in our trades, we have 2 different trades. One of them is a long-term bullish out to September, and then we had a short-term bearish that expired in April. In tomorrow's MIT Live, I'm going to go over the CCJ example. But CCJ is in front of you. CCJ is a uranium name. We've been bullish uranium going back to 2017. If you go on YouTube and search Jonathan Rose, Masters in Trading Uranium, you'll see uranium videos going back to 2017. Bullish, bullish, bullish. But how do you stay bullish, right? Because markets have volatility. So if I just pull up a pen here, and we look at CCJ going back to 2023. And CCJ, strong. But you know what? It's not easy. It's not like you could just buy the stock and sit on your hands. What we need to do, ideally, is if we talk about units, and let's say a unit is 100 shares, okay? Units, or we can call these tranches. Tranche. When we're getting into a trade, we really want to get in with different units. So we have the ability to fade the market if it goes against us. When the market goes against us, if you're buying, you're fading. So you could buy, and buy. That's called fading the market. And that's having an opinion. When the market goes against you, where you see it as opportunity. Now, the real benefit to trading in tranches is just like we get in on tranches, we can get out in tranches. So it gives you the ability to buy 3 tranches, sell 1, sell 1. Maybe you buy 2 more tranches, sell 1. And this allows you to keep holding and holding and holding. But what it also does is when the market goes against you, you can see that as opportunity. One of the best ways that I have found to stay in trades is to buy out of the money options. When you buy out of the money options, if you buy an out of the money option, stock's trading at 50. If you buy at 54, you're just buying stock at 54. If the stock doesn't get above 54, you lose 100% of your principal. But when you get in the trade, you're risking whatever you're comfortable with. You make that decision before you get into the trade. It's really, really important. I believe it was Friday. On Friday, we talked about IPO lockups. Actually, it was Monday. On Monday, I'm not sure why the pen just did that, we talked about IPO lockups. IPO lockups is an awesome trade that presents once in a while. It doesn't present all the time, but an IPO, what happens is in the first 6 months of an IPO, shares are locked up. So an IPO lockup period presents predictable patterns in stock behavior, offering strategic entry points for traders looking for consistency. Let's explain the IPO lockup one more time. Here's a standard IPO lockup. And let me tell you guys, this happens in, I would estimate, over 90% of the lockups. It is a very, very high probability trade. And the way that a lockup works is an investment bank takes a company public. And when they take a company public, they put a floor under the stock because they're having meetings and they're thinking, how much money could we possibly raise? Okay, $20 with 1 million shares, 20 million, that's a good valuation. And if they thought they could sell it for $30, gosh darn it, they sure would. But what happens is every IPO has a 6-month lockup. So 6 months, oftentimes the stock will go higher. It'll go higher. So much great IPO news. But all these directors who own the company are dying to sell because they sat in all these meetings and were told that the stock is worth $20. Well, 6 months later, they're now $40. They are dying to sell. So what ends up happening after a lockup period is you're going to see the stock sell off. Over time, if it's a healthy company, we might see it rally once again. And on Monday, I showed examples with Amazon, Google, Facebook. IPOs all have this similar type of behavior. Going over our IPOs, I shared a trade in A-Lab, Astera Labs. Astera Labs had its IPO, rallied like IPOs do, came off, but it's still up 100% from its IPO price. Now, when we got into this trade just the other day, we're going to get in and we're going to buy puts. We're going to buy puts with a fixed amount of risk. Well, ALAB has gone higher. We need to look at this like if we like selling here, we love selling here. This is now on sale for us. Of course, we're selling it. We're not buying it. We're betting for it to go lower. But we are going to fade ALAB by adding one more tranche. What does that look like? Well, if I pull up the options, I like going to July, 86 days, ALAB, buy to open the 55 puts, mid-market 265, 270. We want to hold this trade for 86 days or until we could take out a big fat profit. Your risk is $265 per contract. You can never lose more, but before you get into this trade, That's the decision you need to make. Are you comfortable risking that amount? That's the IPO lockup trade. That's how you manage a position and how you fade when that position goes against you and you still have conviction. Oh, geez. You guys ready to talk about the rip your face off rally? Because it possibly could happen. I actually think it's going to happen. QQQs. Go back the last 3 weeks now, and you'll see us talking about the line in the sand. The line in the sand is one powerful number. One powerful number was 433 in the NASDAQ. Okay? 433 in the NASDAQ. Here is VIX term structure today. Here was VIX term structure before the market fell. Look at the VIX 1 year against the VIX 9-day. VIX 9-day today 1653. VIX 9D 1926 when the market was falling. Follow VIX term structure, 9 days. This is going to be the near-term VIX, the far-term VIX, 3 months, 6 months, 1 year. But you can see nice and high when the market's falling. And then today, why we think we might see a big rally is we have those VIX falling. Yesterday in our Discord, who is anticipating a VIX buy signal? Our line in the sand, 433. I don't think it stands a chance. The guys in the Discord really looking to get long. Tom says it well. VIX 9D is being stubborn. VIX 9D, anything under that 17 is crazy bullish. Daily chart. A daily chart right here. 100 period moving average. 200 period moving average. Indices, stocks don't stay around big numbers. They don't want any part of them. They can hang around them, but eventually they're going to get away. What did we do right here? We go under a major number, we get back up, and then we gap. Geez, that's bullish, guys. We might see that rip your face off rally. That's on a daily. But let me take you to a weekly. And let's see what we have on a weekly, because on a weekly, again, stocks don't like to stay around big numbers, 100, 200 period moving average. This is on a weekly. Our line in the sand is right here. Goes down, and then it's going to get sucked right back up. If we do get back up to that line in the sand at 433, guys, that's that rip your face off rally that I'm talking about. If we pull up the options, what I like is 14 days. Why? NFP, non-farm payroll, unemployment. Unemployment is always the first Friday of the month. Buy to open, 440 strike calls. That's not a very good market. I'm not sure why I just caught this like that and there was a bad market. I'm just looking on the other screen right here. 440 strike calls, $1.75. You can buy them right now. $1.75 right now, buying at the market. 440 calls, 14 days to go until expiration. Last trade on the QQQs is 426. So we're down 50 cents from that key level. Now, these line in the sands are really powerful. We've been talking about it. And when we traded above bullish, bearish volatility, and then we could see that line in the sand become support, right? Then it traded through. The market tried to get smushed. Got down to 415, reversed right back up to 428, 429. Risk reward, buying Qs with 14 days to go until expiration for $1.75. It makes so much sense to me because you can buy one, you can buy 10, $1,750 for a 10 lot. that 10 lot will get you short 1,000 QQQs at a price of, or excuse me, get you long 1,000 QQQs at a price of 440. So again, long 1,000 QQQs at a price of 440. You can do that if you buy those options for $1.75 10 times. Hope that makes sense. I'm a big believer, guys. Look at the market from a different perspective. We like to say the creative trader wins. Trade smart, and I'll catch you live 11 o'clock tomorrow. My name is Jonathan Rose, founder, Masters in Trading.
Join us every weekday at live.mastersintrading.com